Good afternoon, traders. Happy January 10th, year of our Lord, 2024. Sorry, I just realized I had not finished getting everything set up on my other screen. How are y'all doing today? Happy Wednesday. Good news. My consulting that I was supposed to be doing in South Carolina on January 24th is now moved to online. Praise Jesus for that, because I was not looking forward to that trip. Bad news is it's during our normal time, so I don't think I can move it out of there. I believe it starts at 3 Eastern, which is like directly in the middle of our time here. So that will be a Discord only day, but we'll make it work. Brian, good afternoon. It's hump day. Hey, Donna, good afternoon to you. Glad you're here. And welcome to all the new traders. We are getting tons and tons and tons of new traders in the OVTLYR trading room. So I am so stoked to have all of you here. What we're going to cover today is how I trade. And I'm one of the partners here at OVTLYR. And I'm going to showcase with you exactly how I trade. And I don't take every single trade that comes through on OVTLYR. I only trade based on the criteria that I trade. And you could definitely have different criteria for me, but I just want to showcase what I'm doing every single day as I'm ramping up to enter the 2025 US Investing Championship. So I'm super stoked to have you here. So let's jump right into our market analysis. Okay, welcome to the OVTLYR trading room. This is how to trade only 10 minutes a day and exactly how to take the guesswork out of trading. With our OVTLYR trading strategy, it always starts with the market, with the 10 over the 20, price over the 50 on the SPY, and then the same thing with our market breadth indicator, the MMFI. Now the SPY is right up in this order block area. It's really close to hitting brand new all-time highs, which is great. Now, we need to take a step back. This purple line that you see right here is overhead resistance that was established back all the way at the end of 2021, the last time we had a previous high. And the cool thing with order blocks, as you'll get to see as we go through and we use these more and more, is that they work. They really, really work. Now, the first time that we got into this area, we were solidly rejected. Now we're coming up here a second time. If it can close above 478.50, then this order block goes away and we might be looking even higher. But don't be surprised if we see a pretty big reversal, or maybe even a small reversal, coming up in the near future. I'm definitely not betting against that, because the trend with the 10 over the 20 and prices over the 50 is still bullish, but I wouldn't be surprised if we saw an order block, which is institutional orders looking to get filled and push this back down. Next, this is the MMFI. So this is the percent of stocks inside the S&P 500 that are both their own 50-day moving average. And as you can see here, the 10 is over the 20, price is over the 50, but this is coming down hard and fast. And I would imagine that by tomorrow, this actually crosses down on the 10 and 20. And when that happens, I stop trading. When that happens, that means the market breadth has run out. When that happens, that means the number of stocks that are advancing is now in decline. And so I would be looking to sit on the sidelines until that resolves itself. So today is probably going to be our last offensive day for maybe a little bit. What do I mean by offensive day? Well, we have 3 types of days. We have a transition day where we're not in the market and we're not going to be putting on any trades. Next is a defensive day. We're already in the market, but we're not going to be adding any new trades. And today is an offensive day where all market conditions are lined up, and you always start with your existing positions looking to reduce risk. So let's go take a look at our existing positions right now, and we'll cover the stop out points and then our selling into strength points. So a break of the 10 EMA, a half ATR from entry, or close below yesterday's low. So let's take a look at ED first. ED, Consolidated Edison, is looking outstanding. In fact, it's above 1 ATR from entry, which, if you've been here for a while, you know what happens now. We get to roll this up. Whenever you roll up a trade, you get to keep the trade on, you get to book partial profits, and you get some capital back today. And the trade continues on with you, which is one of the coolest things ever with trading options. Let's take a look real quick. We do not have an exit signal on ED. I like to look at the colors down here. My exit color is 88D4B0. We're not there yet. It's actually just one shade darker. So when we get one shade darker, I'll be looking to exit. But it's not breaking the 10 EMA. It's not breaking down below yesterday's low, and half ATR be somewhere down here. So we're going to roll this one in just a minute. Let's take a look at all. So this is all state, and it's not below yesterday's low. It's not below the 10, and half ATR be somewhere around here from our opening point. So it doesn't have any stop out points, but selling into strength, it does have a stop out point. I should say a selling into strength point. Whenever it's past the shade of green that I like to use, I actually just go 2 shades darker. So we got in on January 5th. I know the little menu thing goes over it, which was here. And we've gone 2 shades of green darker, right? Now, having a plan makes this way easier because you know, hey, if this happens, I'm going to do that. So 2 shades darker today means I'm going to go ahead and exit. So I'm going to take that trade off right now. Then we'll circle back to ED. So this is an all. And I am going to go in my business account on the other screen. So we are currently in the January 19th, 145 calls. And I need to close that. All right, so go to positions, all, click on it, actions, close. There we go. Okay. The Tasty Trade platform has changed a lot, and I'm still getting used to the changes. Okay, so current price shows $5.95. Let's start it at $5.95 and see if we can get filled. So we have a reason to exit on all. That's why I'm exiting. Otherwise, you sit and wait. All right, not getting filled. Replace that. Let's try 590. Okay, that was filled. Fill price was 590. Okay. Oh, geez, now it goes up to 6. That's lame. Either way, I'm out at 590 out of all. That turns to be a 6% gain. Not the biggest gain ever, but I'll take it. Let me drop the notes in the Discord here in the 10-minute trading server, or whatever it's called. What are these called? I don't know what these are called. I know this whole thing is a server, maybe room. I'm not sure. Either way. So closed on the 10th, closed all. This is the 145 calls for 590. And that was a small gain of 6.23% for me. I'll take it. A gain's a gain and not a loss, so I'll take that. All right, so out of all. And now let's go to Ed. All right, Ed continues to look, it's above its 1 ATR point. So this is how we do it. So this is multi-step, but I want to showcase exactly how it's done. Every time it moves up 1 ATR, this is what we do. If a stock moves 1 ATR in your direction, can you roll out and up for a credit? So of course we can here. So let's take a look. In fact, I should edit this. We're just rolling up. Oh, maybe we can roll out. Let's take a look. I didn't even think about rolling out because it is going to expire next Friday. This is Ed. We're in the 90 calls. So we'd be selling to close, buying to open the 92 and a halves. All right, 233 credit here. Oh, how do I change that? 90? No. This used to be so much easier. And then 92 and a half. Okay, 135 credit. Could do that. Or we could keep it in here. Let's do this. Because I do believe Ed at some point is going to run out soon. Let's just keep it in the same expiration. So we'd be looking to sell to close the 90 and buy to open the 92.5. So stock moves 1 ATR in your direction. We can roll out and up, but I just want to roll up. If no, hold the existing trade. So we are going to roll it. Next, as one order, sell to close the original position and buy to open closer to at the money with the same number of contracts. Now for liquidity, we see at least 250. So we have 1,000 here. For the extrinsic, we still want to see 20% or less and 30 cents on 255 is 11%. So that looks good. Yorn, good to see you, my friend. So all of that looks hunky-dory for me. So sell that, buy that. 235 is what it shows right here. Let me see what I can actually get filled at, which doesn't always work at that. But let's try it. All right, we're going to roll up. Let me try 230. I'll try 230. Hopefully we can get price improved. Let's see. Working, filled. Okay. Filled at 231. Not bad, not bad. Sometimes when you look to roll, it's not as easy to get a good fill price, but that was actually pretty good. 231 roll. So now we are in the 92.5s at, let's write all this down. Where am I at? This, that's what I wanted. Okay. Apply to this one. So we're going to say 1, 10, 24, rolling ed. So we rolled up the 90 calls to the 92.5 calls for 2.31. Now, I don't want to write down how much of a gain it is because that can still change. So we rolled up the 90 calls to the 92.5 calls. But since I got it here, let me write this down. So we just took in a credit of 231. And the way that you would do, how you would keep up with it is you would say, okay, we've already got 231. And if I were to close this right now, I would add another 245. So I currently show a gain of 32.5% on ed. Not bad, not bad. I don't like to list that until it's actually closed, of course, but that's a good start. I like that a lot. Now we do need to make a couple other changes. Take partial profits now, frees up capital, keeps the trade alive. So the only thing that's in my portfolio right now is just the 92.5 calls on ed. Nothing else, because we already closed all. Now we move up the half ATR. This is important. We don't want to lose on this trade, right? Of course, anything can happen, but we don't want to lose on this. So we're going to move up the half ATR. So if it comes in closes below the half ATR, we're out. So the ATR value is 130 divided by 2 minus 4.3, so 93.78. Yorn's question, still January. Yes, exactly. Let me edit this real quick. Yeah, Yorn, it wouldn't surprise me at all if we got a closing signal on ed tomorrow. I mean, we just got to move one shade darker on here. So that's why I was just like, let's just leave it here. I don't think we're going to keep it going for more than 9 days. All right, so this is a half ATR from roll. The reason we do all this, the reason we set up everything, the reason we take the time to write down what we're going to do and to follow the plan is because it removes the guesswork, right? It's like if you're in the Marines and you need to go extract your target. I'm pretty sure, I've never been in the Marines, so I'm just making up a hypothetical. I'm pretty sure you have a order of operations that you go through that you will not deviate from. This is what we're doing. We have an order of operations for opening and closing, rolling, and emergency exits if needed. And we will not deviate from those. So a couple other things. It needs to be at break even or better, which it is. Break even would be at 93.16. This is at 93.78. So if it closes below this point tomorrow, we will get out. That is the plan. All right. That is everything we need to do on our existing trades. You got 230. That's a decent fill, Yorn. I got 231. So we're right there. Next is looking at the outlier data. So let's go grab what we have, which there are 11 new names on here. But look at the number. We've got 365 on the bull list versus 1187 on the bear list. So yeah, I do think that the trend is coming to an end pretty soon. That is my guess. Taking a look there. Oh, we have another one that popped up. We have another one here. Now, I did look at Juniper earlier, and Juniper's backtest failed. I'll just show you that real quick. It's actually up like 26% in the last 2 days. There was obviously some huge news that came out a couple of days ago. The outlier data was just behind it, so that's all right. But this had a negative backtest, so we're not going to test it. The news was somebody increased their price target to $40, and all the sheep decided to buy it to make it nearly up to $40. Man, wouldn't that be sweet? Wouldn't that be the life, right? Where you could just be like, my price target for this stock is $1,000. And then everybody's like, oh yeah, we should go buy it. Yeah, that's exactly what happened with Juniper. But it had a negative backtest, so we're going to skip it. But Scene was not there earlier, so let's take a look at a Scene. C-E-I-N. I spell it wrong? C-I-E-N. I before E except after C. Oh, it's right in the middle of an order block going into a second order block. I wouldn't touch this with a 10-foot pole. So I'm not going to trade it. Sebastian, good to see you. Sebastian, real quick to catch you up. We closed Allstate and we rolled up Ed in the same cycle. We just moved it up one strike. And then we don't have any new trades that show up for me and my style of trading. And all that we're looking for on this, it's just one extra step that Outlier doesn't have, and that shows the relative strength of these stocks compared to the market. And then it also tests for liquidity and makes sure that on the average number of shares, it's definitely got plenty of liquidity, which usually translates into options volume. So that is the end of my trading today, right? We did this. We did the relative strength on the outlier scanner right there. And the back testing, we don't have to do a back test because, well, we did a back test on Juniper, but we didn't have to on the other one because it had on Scene because of the order blocks. So we don't have any other steps to go through. That's going to be it for today. And there are days where we do a lot and days where we don't do much at all. But I do think that I really feel strongly that unless something drastically changes, we're going to be going to transition days for a hot minute because the MMFI breadth is running out very quickly. So that's okay. Staying out of the market is a trade. Nobody wants to admit it, but sitting on cash and waiting is a very valid trade. Let's go to our final thoughts. So this is Yvonne Bayaji. Yvonne's a really cool guy. Yvonne actually used to be a monk, and then he turned into a trader. The gap between where you are and where you want to be is called discipline, focus, and consistency. The gap in where you are today and where you want to be is called discipline, focus, and consistency. And you know what helps make that gap up? Having a plan. And not just a plan where it's like, I think I'll do this. I think I'll do that. I guess I'll give the stock a couple inches to run. No. Having a solid plan. I like to call this the unbreakable trading plan. And there are times where I have to make a tweak to the trading plan. But the rest of the time, I know exactly what I need to do. It is an if statement, if you're familiar with computer code. If this happens, then that. If this and this happens, do that thing. It's all binary. Maybe one day I'll get ChatGPT to write this out for me. But having that consistency and discipline to follow your trading plan that you developed will get you to where you want to be. Eventually. It's not going to happen overnight. Speaking of things not happening overnight, this is going to be my new thing. I want to end every trading room with what my results are. I just updated this moments ago. These are my results for the year. 6 trades, 1.84% on the gain, and 50% win rate. And of course, it's sample size of 6 trades is not much to go on, but looking good so far. So yeah, that covers everything in today's Outlier Trading Room. I'll see you right back here tomorrow. Talk soon.